It is the 20th of February 2023. My name is David Hickson, and in today's market update we're going to be taking a look at the three instruments that we have been tracking recently, the S&P 500, gold and Bitcoin. Before we do that, I must remind you to please make sure that you have read and understood these disclaimers. Let's start with the S&P 500, or this is price data for the SPX, which is of course based upon the S&P 500, and the cycle analysis is identical. I'm not going to repeat absolutely everything I've said in previous market update videos. We've got a bit of momentum going recently in these market update videos by tracking the analysis every week, and that's actually a really important aspect of performing a Hurst cycles analysis. There is so much to speak about when it comes to a Hurst cycles analysis that going through everything from the beginning each and every week would be extremely time consuming and very boring. And so I would encourage you to go back and take a look at previous market update videos so that you have an understanding of the context in which I am presenting today's video. The important thing at the moment in the S&P 500 is the fact that we had a trough in the middle of October, which you can see according to this analysis has been phased as the 20-week cycle trough. We therefore have the next 20-week cycle trough expected round about now, or pretty much in the week or two ahead of us. You will also notice that this analysis does not show any cycle troughs longer than the 20-week cycle. That's because this is the approach that I take to a Hurst cycles analysis. When I have some uncertainty about the position of longer cycle troughs, I like to focus on the details of the shorter cycles, because the cycle shapes will reveal the correct position of the longer cycles, and that has been a bit of a theme of recent market update videos, so I don't think I need to dwell on it here. But if you have any questions, please do put them in the comments below the video or join us on our Discord channel. And so it is possible that the trough that formed in the middle of October should be a greater magnitude cycle trough, as I've discussed previously, not only of 40-week magnitude, but possibly even of 18-month magnitude. If that trough in October was not a trough of 18-month magnitude, then we would be expecting the 18-month cycle trough to be occurring round about now. And so we have some uncertainty about the position of the 18-month cycle trough, but we have a great deal of clarity around the position of these 20-week cycle troughs. I can say with a high degree of confidence that a trough of at least 20-week magnitude formed here in the middle of October, and therefore we are expecting the next 20-week cycle trough, as I mentioned, to be occurring over the next couple of weeks. Now, I've put some interesting bar counts over here. It's very important to keep track of the number of days that have elapsed. Hurst discovered over 50 years ago that financial markets are influenced by a combination of multiple cycles which influence those markets over real time, 24 hours a day, 7 days a week, and so forth. And so we have seen 130 days, or bars, this is a daily chart of course, that have elapsed since the trough in the middle of October. Now, the average length of a 20-week cycle that Hurst discovered 50 years ago is 136 days, and so we would expect the 20-week cycle trough to form in about 6 days' time. That is, if this 20-week cycle is going to be a perfectly average length of 20-week cycle. Another of Hurst's principles is the principle of variation, which tells us that the wavelengths are constantly changing. And so, although over time these 20-week cycles will have an average wavelength of 136 days, there is no saying that this particular 20-week cycle will have exactly that wavelength. The other bar count that I have on this chart shows 60 days have elapsed since the 80-day cycle trough that occurred in the week before Christmas. Now, the average length of an 80-day cycle discovered by Hurst 50 years ago is 68 days. And so we would expect another 8 days to elapse before the 80-day cycle trough is expected. There are some other useful figures that we need to pay attention to, and those are the figures over here at the bottom right-hand edge of the chart. These are the recent average wavelengths that Sentient Trader has calculated on the basis of the analysis. You can see that recently the 80-day cycle has actually been running about 2.5 days long at 70.5 days. And so in our expectation of when the next 80-day cycle trough should form, we should consider not only the average wavelength of 68 days, but also the recent average wavelength of 70.5 days. Interesting, the 20-week cycle has been running ever so slightly shorter than the average wavelength of 136 days. You can see it is presented here in weeks as 18.5 weeks. And this bar count over here shows us that 18.6 weeks have elapsed. That is 130 days. And so the 20-week cycle trough is pretty much due now. If numbers aren't really your thing and you prefer a visual reference, that visual reference is provided by these circles and whiskers. Here you can see the circle for the 20-week cycle trough. In other words, the exact time at which we would expect that 20-week cycle trough to occur based upon the recent wavelength of that 20-week cycle is pretty much today. And here is the circle for the 80-day cycle trough. It's about 2 weeks in the future, and you can see all the shorter cycles below that. This combination of circles and whiskers provides us with what we call a nest of lows. That nest of lows indicates when the next cycle trough is expected. The important message here is that we are expecting this 20-week cycle trough to occur soon, perhaps even now. Now let's consider a few other things about this analysis which might indicate what our expectation is. First of all, let's take a look at the M shape that is being created in the markets by the current 20-week cycle. There was our first move up and down into the 80-day cycle trough in the 3rd week of December. And then here is the second move up, and we are now in the final leg of this M shape as price comes down into the 20-week cycle trough. And as price moves down, we are able to calculate some targets for that downward move, which is what we have been doing in recent market update videos. And we use our FLDs to do that. So let's zoom in and consider some FLDs and the targets that they are generating. First of all, here is the 20-day cycle FLD. We have a sequence of interactions between price and every one of these FLDs, and I mentioned this sequence of interactions in many of these videos, so I'm not going to go into too much detail here because I have quite a lot of information to get through. But here is the sequence of interactions between price and the 20-day FLD. First of all, we had a very messy A category interaction, which was in the week between Christmas and New Year. One of the reasons why that was such a messy interaction was because many people were on holiday at that time and price movement was not very indicative of the true cycle action, if you like. Round about the formation of the 20-day cycle trough, we would expect price to find support at the level of the 20-day FLD, which it pretty much did in the 1st week of January. That's our B category interaction. Our C category interaction is where price pulls up away from the 20-day FLD and reaches up towards its first peak. The D category interaction is where price comes back down to the 20-day FLD. It is expected to cross below that FLD and achieve a target to the downside as it forms the 40-day cycle trough. As you can see, instead of crossing down below the 20-day FLD and reaching its target, price actually found support at the level of the FLD. That is unusual, and it indicates a strong degree of bullishness in the market, which we discussed at that time in the market updates. The next interaction is where price crosses back up above the level of the FLD, seeing as it didn't really cross below the FLD. In this case, the E category interaction is simply where price moved back up and stayed above the level of the 20-day FLD. Our next interaction is labeled the F category interaction, and it is where price crosses down below the 20-day FLD on its way down to the next 80-day cycle trough. What often happens following that F category interaction is that price comes back to the 20-day FLD, or any FLD, and finds resistance at the level of the FLD. And that is exactly what happened last week. That is labeled a G and then H category interaction. And so we have a complete sequence. It is possible that price will come back up to the level of the 20-day FLD, find resistance again in what would be labeled a double GH category interaction, before finally moving down into the 80-day cycle trough. However, seeing as this 20-week cycle trough is possibly upon us already, we will certainly be watching this 20-day FLD, because if price breaks strongly up above it, That would provide us with evidence that the 20-week cycle trough has already formed. Let's look at the next FLD, the 40-day cycle FLD. And we can pick up the sequence over here in December. This is the D category interaction where price crossed down below the 40-day FLD on its way down to the 80-day cycle trough. Here in the first week of January is the E category interaction where price broke up above the 40-day FLD as it bounced out of that 80-day cycle trough. The interaction that we are witnessing at the moment is in fact the F category interaction. And you can see how price has crossed below the FLD over a weekend. It is fascinating to me how often that happens. I suppose weekend days are 2 out of 7 days of every week, but you will often find a situation where price is above the FLD on a Friday and stays above the FLD, and on a Monday, by not really doing anything, it has crossed below that FLD. That is the situation here. Where is this target? In fact, we cannot yet calculate the target. The reason for that is because in order to calculate the target, we need to measure the point at which median price crossed below the FLD. Of course, we can only calculate median price when today's trading closes. And I'm recording today's market update video before the markets even open in the US, and so we haven't seen any trading action yet. It is quite possible that we will see a very bullish day, in which case the median price of the day could be a lot above Friday's median price, in which case the crossing point would be at a higher level. If we have a bearish day today, then the median price may be well below Friday's median price, and so we would have a much lower crossing point. If today's median price is at roughly the same level as Friday's median price, then we would generate a target of about 39.35. We would expect the same sequence of an F category interaction followed by a G and then an H category interaction before the formation of the 20-week cycle trough. However, we must bear in mind that time is running out for this 20-week cycle trough to form in the market. Let's take a look at another 2 FLDs, and we're not going to go through the whole sequence, but I'm going to point out the 80-day and the 20-week FLDs here. As price comes down to form the 20-week cycle trough, at this point we would expect price to cross below the 80-day FLD, and it might possibly find support at the level of the 20-week FLD. Why would that be? Let's zoom out again to understand why. And when considering a 20-week FLD, I like to watch a weekly chart as opposed to a daily chart because it provides a simpler sequence of interactions between price and the FLD. And so here is our 20-week cycle trough. Now, if this trough in October was a high magnitude trough, in other words, if that was the 18-month cycle trough, then you will know from our sequence of interactions that the first interaction was this one over here, the A category interaction, which generated a target close to 4,500, which has not yet been achieved, of course. And at the time that the 20-week cycle trough forms, we would expect the 20-week FLD to provide resistance. That is why the 20-week cycle FLD is definitely one to watch. However, if the bullishness in this market persists, it is quite possible that the 20-week cycle trough will form at a level that is well above the 20-week FLD. And so I am going to be watching very closely. Let's zoom in here. I'll be watching the 40-day FLD and the 20-day FLD because price should at this point be held below those FLDs. In other words, they should provide resistance for a G and an H category interaction. That is from both of these FLDs. If, however, price breaks up well above these FLDs, we are going to have to consider the possibility that the 20-week cycle trough has indeed formed in the market, and that the bull in this market is alive and well. When we take a look at Bitcoin in a moment, you will see that we had the similar situation occurring last week in Bitcoin. And it is just as well that we were aware of the possibility because that trough did in fact form in Bitcoin. Taking a look at gold, we have a different situation, of course, but in some ways there are many similarities. We have this very big trough over here at the end of September, which I've spoken about in previous market update videos, and in our Hurst Cycles Notes Macro Outlook, we've been speaking about this trough as well. It is, in my opinion, a trough of at least 54-month magnitude. a high magnitude cycle trough. There has been some difficulty in this analysis with the position of the 80-day cycle trough. You will notice that during this period of time in which the 80-day cycle trough was expected to form, there aren't any really clear troughs that formed in the price action. When that happens, it becomes very difficult to position the 80-day cycle or whatever cycle is expected at the time. And so our focus has to shift to the next cycle that is expected. In this case, it is the 20-week cycle trough that we are expecting to form. Here you can see the nest of lows is centered around about the first week of March. However, there is something important for us to pay attention to here. And if I zoom in, we can see in a little more detail the fact that we have a 20-week cycle circle right over here below Friday's price action. And then below that, we have a nest of lows for the 20-day cycle trough. The implications of this are that we are expecting a 20-day cycle trough to form, or we were expecting a 20-day cycle trough to form at the end of last week. Therefore, we would expect one more 20-day cycle to elapse until this 20-week cycle trough forms in the first week of March. However, this circle for the 20-week cycle warns us of the possibility that the shorter cycles have not been correctly positioned and that 20-week cycle trough could come in early. In order to resolve this situation, we look back at our analysis and ask ourselves how confident we are in those shorter cycle trough positions. I've already pointed out the fact that this 80-day cycle trough is in a very questionable position. It could just as easily be at that position over there, or there, or there. And so I'm not feeling very confident about the 80-day cycle analysis. What about the 40-day cycle analysis? Well, you can see this 40-day cycle trough has been found over here. Again, it is a little questionable. It is possible that 40-day cycle should have occurred a little bit later, or perhaps even earlier, over there, or what about over there? As you can see, there has been great difficulty in positioning the shorter cycle troughs. This 40-day cycle trough over here was in fact quite a good position for the 40-day cycle. It looks fairly obvious in the price action. However, we have an outstanding question in this gold analysis, which you must bear in mind. You can see that I have two bar counts over here. That is because, according to this analysis, I have positioned the 54-month cycle trough over here at the end of September. If we take a look at the first 40-day cycle that elapsed following that 54-month cycle trough at the end of September, you can see a bit of an anomaly. We have a bearish-shaped 40-day cycle with a very early peak, a very questionable 20-day cycle trough. Where was it? Was it here? Was it there? And then a rather miserable second 20-day cycle into this 40-day cycle trough that came in at very much the same level as the trough that formed at the end of September. That is an anomaly in our trough analysis. And I should remind you again that peak analyses in gold are often more reliable than a trough analysis. But let's quickly discuss this trough analysis anomaly. Is it possible to entirely resolve it? In my opinion, it isn't. There might be other analysts who resolve that situation, but I prefer to leave it unresolved for now, but bear in mind the fact that we have an anomaly. And the way that I do that is simply by displaying two different bar counts. The one bar count measures the number of days that have elapsed from the end of September, which, as you can see over here, is 145 days. The second bar count measures the number of days that have elapsed from the later trough in early November. That, as you can see, is 109 days. Now, the average length of a 20-week cycle, I have already mentioned, is 136 days. And so, according to the first bar count, with the 54-month cycle trough at the end of September, that trough is already 9 days overdue. Now, following a really big magnitude cycle trough, do you know whether troughs are expected to occur early or late? I hope you do. The answer is that troughs are expected to occur early following a very high magnitude cycle trough. And so the fact that there have been 145 bars since the trough at the end of September tend to tilt the odds in favor of the fact that this 54-month cycle trough would be better positioned over here at the beginning of November, meaning that we have witnessed only 109 days since that 54-month cycle trough, and we therefore have about 27 days still to go before the 20-week cycle trough is expected to form in the market. But now, what about this 20-week cycle circle? Do we just ignore that? No, I don't ignore it. I've already mentioned that peak analyses are more reliable than trough analyses, and we are displaying a peak analysis at the top of this chart. So let me show you what I'm going to be doing with gold over the next few weeks in terms of determining what is happening with this 20-week cycle trough. Let me display the 20-day cycle FLD. I'm not going to go through the full sequence of interactions. Suffice to say for now that I believe that this interaction over here was an F category interaction. In terms of our trough analysis, we would expect a G and then an H category interaction before the 20-week cycle trough occurs. As you can see, price tried to rise towards the 20-day cycle. FLD failed to get there. That was a potential G category interaction, and then this was a potential H category interaction. And so the 20-day FLD based on the troughs doesn't really provide us with any information, except to say that we would expect this 20-day cycle FLD to provide resistance. It should provide resistance up until the point at which the 20-week cycle trough forms, after which, of course, we would expect price to cross above the 20-day cycle FLD. But now I've already mentioned the trough analysis is not very reliable. The peak analysis is much more reliable. So let's take a look at an FLD based upon the peak analysis. We can simply do that in Sentient Trader. In fact, we can for a moment plot both of them. You will notice an interesting thing, and this is one of the great strengths of the FLD as a tool, that the 20-day cycle FLD based on a trough analysis and based on a peak analysis is in fact very nearly the same line. They are displaced only by about 1 day from each other. And so this is why when people ask me, should they rather be watching the peak FLD as opposed to the trough FLD, I often say that there is not usually very much difference. If you end up watching the wrong FLD, you might perhaps be a day out, although of course in some analyses you will be more than a day out, but very often it doesn't make much difference. So let's just focus on this peak FLD only for now. Here it is on our chart. And following a peak of 40-week magnitude, I'm sure that you can label these interactions by now. This interaction here is, of course, the A category interaction where price crosses down below the 20-day cycle peak FLD. It reached down and, of course, achieved its target within a day or two. So what is the next interaction we are expecting between price and the 20-day cycle peak FLD? At about the time that the peak of the 20-day cycle forms, here is the nest of highs in this case, and so you can see it is expected a little later this week. We would expect price to find resistance at the level of the 20-day FLD based upon the peak analysis. And so my expectation for gold is that price will come up to the level of the 20-day cycle peak FLD, very close to the 20-day cycle trough FLD, find resistance there, and then move down into the 20-week cycle trough expected in the first or second week of March. Finally, let's take a look at Bitcoin, and there isn't very much to be said about Bitcoin this week because in last week's market update I was speaking about this 40-day FLD, and let me actually turn off these other FLDs so we can focus on that. Here we go. In last week's market update I was focusing on the FLDs, and I was speaking about the fact that price had just crossed below the 40-day FLD, but I pointed out the fact that we had a nest of lows for the 80-day cycle trough, which was at that point already overdue. And I mentioned that it was unlikely, in my opinion, that price would then achieve the target as a result of crossing below the 40-day FLD. Given the bullishness of Bitcoin recently, because of this 54-month cycle trough that I believe formed in November of last year, I thought it was quite possible that that 80-day cycle trough was going to form at about that time. I recorded last week's market update video, as I do usually, on a Monday, so that's that bar over there. And in fact, on Tuesday and Wednesday, as you can see, there was a tremendous amount of bullish action. Price crossed above the 40-day FLD and achieved its target. And so it does seem very likely that the 80-day cycle trough has indeed formed and that it was over here in the second week of February. So what are we expecting to happen now? Let's zoom out a bit and consider the bigger picture. I've mentioned before that Bitcoin is a particularly interesting instrument, in my opinion, because of the fact that both the peak analysis and the trough analysis seem to be almost equally applicable. Our most recent very big magnitude peak occurred over here, of course, in November of 2021. That was a peak of 54-month magnitude, in my opinion. Price moved from that 54-month cycle peak all the way down into what was probably a 54-month cycle trough in November of 2022. Price is now bouncing out of that 54-month cycle trough, and you can see exactly where it is going. It is heading up into this 18-month cycle peak. You can see that we have had 465 days that have elapsed since that peak in November of 2021. Another interesting point about Bitcoin is that it does, of course, trade 7 days a week, 24 hours a day. And so it matches Hurst's expectation of cycles influencing the price action over continuous time very well. So the average length of an 18-month cycle is 546 days. And so we probably do have about 80 days left before the next 18-month cycle peak does form. Zoom in quickly and consider what is happening at the moment. Here is the nest of highs for an 80-day cycle peak. You will notice that price seems to have hit a little bit of resistance recently over the past 4 or 5 days, and it is quite possible that that is in fact the 80-day cycle peak. And so we have an 80-day cycle trough over here, in my opinion, in the second week of February. Price has moved up and has either achieved or will soon achieve the 80-day cycle peak. It's important to bear in mind, however, that these are two separate analyses. And so mentioning this 80-day cycle peak does not mean that that will be the peak in terms of the 80-day cycle in the trough analysis. I hope that makes sense. That probably needs to be the subject of a geek video because there is quite a lot to explain about that. But what is important in terms of Bitcoin is that we are looking for this 80-day cycle peak. However, we have a strong magnet pulling price upwards into this 18-month cycle peak expected over here towards about the end of April. I do hope that you found this market update useful and interesting. If you have any questions, please join us on our Hurst Cycles Discord server or pop them in the comments below this video.